In this video, we will talk about Sime Darby in two parts. The first part is about segmental reporting. The important things to know is about company's background. Sime Darby Company has been established in October 1910 by British businessmen William Sime and Henry Darby in Malacca. Over the years, this company has more than 270 operating companies and has expanded in 90 countries with over 20,000 employees. Sime Darby is the type of publicly traded government-linked company or known as GLC. The reason why Sime Darby became one of the most successful companies in the world is because the vision and mission that they lay out. So what is the vision of Sime Darby? It is to be a leading multinational corporation delivering sustainable value to all stakeholders. There are several missions of these companies which are committed to developing a winning portfolio of sustainable business, and they also subscribe to good corporate governance and high ethical value. Lastly, continuously strive to deliver superior financial returns through operational excellence and high performance standards. These are the strategies that used by Sime Darby to achieve their objective. The first one is effective capital management. By prioritizing capital allocation and working to diversify revenue in response to evolving trends in the agriculture and food sectors. The second point is expediting and execution of ventures using breakthrough innovations that can improve performance and efficiency. For the third strategy is to uphold their commitment is to sustainable and responsible agriculture practice that can be traced back to our entire supply chain.
Next part that we are going to discuss is the management approach of Sime Darby Berhad. So what is segment reporting in general? Segment reporting is a reporting of a segment in an operating company. Segment reporting is also best described as a component of an entity that involves in business activities. The main purpose on doing the segment reporting is to give an overview and information to the third party and the outsider that might want to use the information about the performance of the company, such as investor. All the related decisions to be made in the operating segment should be made by the chief operating decision maker, and all the discrete financial statements should be made available for anyone to review. These are the three factors that we have to consider on having a segment reporting. First, the nature of the business itself. Second, the responsible of managers. And the last one is the information presented to the board of directors. For your information, Sime Darby Berhad is an investment holding company that involved in a lot and variety of business, such as trading, healthcare, and logistic business. Let us take a look on all the segments that Sime Darby Berhad has to offer. First, we have the industrial segment. In this segment, Sime Darby Berhad offer an earth-moving and industrial solution to their customers. For motors division, Sime Darby Berhad represent over 30 world's largest brands in the automotive industries. In the logistic division, Sime Darby Berhad owns and operates the Weifang port in Shandong, China. They also provide the value-added service to their customers, such as logistics service, ship tallying, and tagging. For the healthcare division, Sime Darby Berhad offer the best private healthcare service for their patients. They are also being its own benchmark against the global standards. Next, the segment reporting factor that we need to consider before having a segment reporting are the responsible of managers. Who are the person that is responsible for each segment that we have discussed earlier, which are industries division, motors division, logistic divisions, and healthcare division. So first of all, The person that is responsible for the decision-making of industrial segment is Dean Mehmet. For motor division, it would be Andrew Basham. However, for logistic division, the person that is responsible for the decision-making is Liu Tiam-Huat. And lastly, healthcare division is Peter Hong Kapang. And the last factor that needs to be considered for having a reporting segment is the information presented to the board of directors. Information such as the segment result consisting revenue and expenses should be disclosed. Other than that, the segment assets and liabilities, the segment additional to non-current liabilities, and the segment by geography. All of this information should be disclosed by each segment. And usually, CODM, which is the Chief Operating Decision Maker, has to assist each of their segment in providing the company with this required information.
There are several types of business. For the first segment, it's about products and services. In Sime Darby, there are 4 types, which are industrials, motors, logistics, and healthcare. For industrial segment, Sime Darby has been doing heavy equipment sales on new and used, power system sales, product support, equipment rental, and industrial solutions. Apart of that, on motor segments, there are assembly, distribution or import, retail of new and used cars, after-sales servicing, and rental. While in logistics segment, there are loading and discharging, tailing and tagging, container-related service, sorting and repackaging, and start yard services and cargo storage. And lastly, in healthcare, Sime Darby provided services such as hospital operations and day surgery center. Next segment is about geography. Sime Darby has been in operation with more than 100 years, with over 90 countries involved, including with Australia, China, Malaysia, Singapore, New Zealand, and so on. They have diversified portfolio across different sectors and geographies, giving this the unique ability to leverage on an established network to broaden the earning base.
We have discussed earlier on who is responsible for each segment that Sime Darby Berhad have. Now, let's see what are their responsibilities towards their own segment. Their main responsibility of being the chief operating decision maker are the first to make decision for each segment. All the related decision that has to be made in their segment should be decided by them. The next one, they have the responsibility to allocate all the resources in their own segment. This is to avoid wastage and defects. They are the person who has the access to their segment's performance. Other than that, CODM also act as a conduit between the board of directors and the management. Besides this main responsibility that they are responsible to do, they also have a responsibility to act as a strong figure and have a strong sense of leadership in their segment. Also, they are responsible to manage their daily and day-to-day basis operating.
Segmental reporting. For introduction, a reportable segment is a business segment or a geographical segment identified on the basis of foregoing definition, for which segment information is required to be disclosed by the standard. In addition, enterprise revenue is revenue from sales to external customers, as reported in the statement of profit and loss. The standard gives us the guideline or the process to identify between the reportable segment and non-reportable segment. The first one is threshold for reportable segment, 10% rules, and the second one is minimum number of reportable segment, which is 75% rules. 10% threshold test, the calculation of the 10% rule can be based on total revenue, total profit and loss, and also total assets. If the amount calculated is 10% or more, it should be presented separately under the reportable segment. Otherwise, if it's less than 10%, it should be aggregated with other operating segments that do not meet the 10% rules, and also it will be disclosed separately under the other segment. For Sime Darby, the company calculated the 10% threshold test based on the revenue basis. If you look into the calculation, the company took the external figures and also the internal figures to get the total revenue. The 10% threshold test calculation, the formula will be revenue from each segment divided by the total revenue and multiplied by 100. If you look into the calculation, the logistic, healthcare, and other segment will be aggregated into one segment, which is all other segment. On the other hand, the industrial and motor segment will be presented separately. The 75% rule is the test that can only be conducted under the revenue basis, and it has to be done after the 10% threshold test is performed. After determining the reportable segment, the company should ensure that the total external revenue attributable to those reportable segment is at least 75% of the entity's total revenue. The formula for this 75% rule test is the external revenue of those past attributable reportable segment divided by the total external revenue. If you look into the calculation, Sime Darby managed to pass this test, for which the amount presented is 99.45%. In the case of which the Sime Darby did not pass this test, the company should identify the additional reportable segment, even if they do not meet the 10% threshold test, until at least the minimum requirement of 75% is met. After we have done the 10% threshold test, the reportable segment should have their own column, of which in this case, the industrial, motor, hotel, and construction will be presented separately, while the other segment that did not manage to pass this 10% threshold test, such as logistic, healthcare, and others, will be combined under one column, which called all other segment. After we have computed the total revenue from external and internal revenue, we will add some other information such as operating profit or loss and share of profit of joint ventures and associates to get the net amount of total segment reporting in the end.
The critical advantage of segment reporting is transparency. Analysts, potential investors, and other stakeholders need complete information to evaluate a company's sustainability and growth and monitor its management's performance. The risk of investment in the equity of a company that discloses complete information is lower than a company that withholds information. Greater disclosure should therefore bring down the cost of capital for a firm. Segment reporting also allows financial statements users to understand better the fluctuations that might affect overall numbers for each segment. If a business shows much higher earnings than expected, segment reporting shows where those earnings are coming from. A stakeholder can look at the same report to determine if the numbers are sustainable. In a simpler explanation, segmental reporting advantages gives a better understanding of financial statements. Second, the profit-making and loss-making units can be easily identified with the help of segmental reporting. Third, it helps in the optimum utilization of resources and better presentation. And lastly, fourth, it helps potential investors in better investment decisions. Every reporting method has its own pros and cons. Just like segmental reporting, the disadvantages are first, there are many disclosures required in the case of segmental reporting. Hence, it is a time-consuming process. Second, the data presented can be misinterpreted by the investors or creditors. Third, method of reporting inter-segment transactions are different for each organization. Fourth,
The base of the segment is also different, as some organizations divide the segment based on geographical location, and some organizations divide it based on product wise. And lastly, fifth, the common costs are sometimes difficult to allocate. To conclude, Sime Darby used segmental reporting to comply with financial reporting requirement and to set out in a core principle. This principle requires the company to disclose information to enable users of its financial statements to evaluate the nature and financial effects of the business activities. This will help the company in their performance and helps them in decision making. For interim report, I would like to explain the basis of preparation of the report. First is integral method, where the interim report is a fraction of the annual report. The function of this method is to predict and explain the financial information for the full financial year. The second one is discrete method, where the interim period is a separate period and the reports are prepared on a periodic basis. For example, the report is prepared for every 3 months for 4 quarters annually. This method should be treated as an accounting period separately from annual cycle. As for Sime Darby, they use discrete method as the interim report is prepared by quarters annually, which is every 3 months on periodic basis, and each period stand on its own.
Okay, next, I will explain about the accounting policies in preparing the interim reports by Sime Darby. The company used 2 accounting policies, which are the basis of consolidation and foreign currencies. First, for basis of consolidation, the subsidiaries are entities over which the group has control. The group controls an entity when the group has power over the entity and has the exposure to or rights to variable returns from its involvement with the entity and has the ability to affect those returns through its power over the entity. Next, for business combinations under common control are accounted using the procedure method of merger accounting, where the profit or loss and other comprehensive income include the results of each of the combining entities from the earliest date presented or from the date when these entities came under the control of the common controlling party. Next, for joint ventures are separate vehicles in which the group has rights to its net assets and where their strategic, financial and operating decisions require unanimous consent of the group and one or more parties sharing the control. And the last one, for basis of consolidation, it is associate are entities in which the group is in a position to exercise significant influence. Significant influence is the power to participate in the financial and operating policy decisions but not control over those policies. Second is foreign currencies. The presentation and functional currencies. Ringgit Malaysia is the presentation currency of the group and of the company. Ringgit Malaysia is also the functional currency of the company. The functional currency is the currency of the primary economic environment in which the company operates. The group's foreign operations have different functional currencies. For transaction and balances, foreign currency transactions and monetary items are translated into the functional currency using the exchange rates prevailing at the transaction dates and at the end of the reporting period, respectively. Foreign exchange difference arising therefrom and on settlement are recognized in profit or loss. Next is translation of foreign currency financial statements. For consolidation purpose, the foreign operations results are translated into the group's presentation currency at average exchange rates for the financial year, while the asset and liabilities including goodwill and fair value adjustment arising on consolidation are translated at exchange rates ruling at the end of the reporting period. The resulting translation difference are recognized in other comprehensive income and accumulated in exchange reserve. Next, I will present about the types of interim report prepared by the company. The preparing of interim reports should contain, first, all of which included headings and subtotal in its most recent annual financial statements. Next, the selected explanatory notes required by the MFRS 134 interim financial reporting that focus on the significant changes in financial position. Next, the basic and diluted earnings per share on the face of the of the statements if the entity present the items of profit or loss in a separate statement. And the last one is, the report should be prepared on a consolidated basis if the most recent annual financial statement was a consolidated statement. Okay, for Sime Darby, the company prepared the interim report that consists of consolidated statement of profit or loss, consolidated statement of comprehensive income, consolidated statement of financial position, consolidated statement of changes in equity, and the last one is notes to the financial statement.